everybody's having a great Wednesday so far. Let's get to Tom Gentile in 5, 4, 3, 2.
Hey everybody, Tom Gentile. Welcome to the opening bell. It is Wednesday, December 8th, 2021. Glad to have you in. A lot to talk about today. Got a lot going on today. Ryan, good morning. How you doing?
Good morning. I'm doing pretty good.
How you doing? So, anyway, I mean, I got news. I've got, kind of opening bell stuff, which is pushing this market around today. I would like the market to tame itself a little bit. We'll get into all of that. What else I want to do? I want to talk about trading Darknet today. Darknet is I guess you want to call it a 30-day swing trading strategy that I have. And we'll take a look at that. We'll take a look at some stocks on Darknet if anything's popping up here today. Cheap. And I'm not talking about my brother-in-law in this segment. I'm talking about cheap options, expensive options, and what I do with expensive options. And so I want to talk about that. I've got a list I want to share with you guys in terms of what I'm looking at for my high probability trading strategy, which is something we call rocket wealth. And I want to get into rocket wealth as well. And of course, I don't want to get away without talking about some stuff we're going to be doing tomorrow. So typically I'm here Monday, Tuesday, Wednesday. You guys all know that, all right? I come to you with, I want to say 95% education, okay? This is not a 95% sell you into something. This is a 95% education channel here. And so I do want to tell you what I am doing is I'm taking over the airwaves tomorrow at 9:30 for a very special event too. And so I look forward to seeing you. I have got a new crypto coin. All right, most of you have never heard of it. Okay, it's not Bitcoin, it's not Ethereum, it's not Doge. It's something else that really, really looks good. I want to talk about what that is tomorrow. Garrett and I will be coming together. Hey, 1 second. I just realized something. I will not make it through the hour without plugging in my computer. Oh my God. I'm looking up there like, something's wrong here.
That would have been a fun.
I saw the red light come on. I'm like, something's wrong here. Wow, this was going to be a very short broadcast.
Yeah, that would have been a fun interruption.
That thing in the upper right-hand corner. Damn. Anyway, good to see you guys all hanging out here. And YouTube also. Those of you on the YouTube channel, you know what? Love you. Glad to have you in here as part of our simulcast. Let's get started. So first, I want to talk about some of the things that are happening amidst the open today. So as I'm looking at the markets right now, and I look and see, kind of what's going on in the futures markets, you guys all know that. We had a mixed opening, okay? Looked positive coming into the day. And the big headlines around the open were Omicron what we're seeing is we're starting to see mild symptoms. That's what's coming out right now. Whether that changes or not, we don't know. It's almost like, and then here's the other thing. The threat might be countered, as I read it here, with an extra dose of the vaccine, of course. Of course, that's going to save us. Because, I almost kind of think, part of my brain thinks that you got, these guys from Johnson & Johnson, Pfizer, Moderna, they're all getting together in a back room, They're rapping, Pfizer, Moderna, I know you earner. Get in line, you got to wait your turner. And they're all also saying, what are we going to do to sell more vaccine? What are we going to do to get the government to pay for more of our retirements? Hey, let's just make sure every variant that comes up, we've got the cure. And so that's what I see. All right, so mild for now, what that means is that the market is reacting positively on that news. All right, in another area, the UK has decided we're going to work from home. We're going to work from home now. So that's an issue too. That may be more of a negative issue. We'll see if that comes out. Cathie Wood is launching another ETF because she doesn't have enough of them already. And so she's actually picked a great day to do it, because we had that big bump up, all right, that kind of Monday turnaround, Tuesday extension day. And of course, she's launching an ETF now that the Cathie Wood family of ETFs got a little bit of bump from what's been happening with them. Amazon, did you guys know there was an AWS disruption yesterday? I don't know if you know it, but it affected their hosting services, affected everything from Disney Plus. There were streaming services that were effective, but that was something they resolved yesterday. And of course, the other big piece that is that true? Did it affect our chat?
Yeah, it did. It was down for half of the day.
Man, I mean, I don't know because I come in here, I do my thing, Ryan, and then I got stuff to do. I got,
Yeah, of course.
I'm my family office that we do as far as trading, investing, and many other facets that we do. I look at publicly traded stuff. Then I've got other things that I look at as well. So I'm not on the chat all day long, guys. All right. I'm here, I check out what's going on with Monday morning. I'm here to do my stuff. And then I'm bumping in and out. And a lot of times, I'm looking at other things. So I wasn't on the chat yesterday, so I missed all of that. Crude inventories. Okay, so there was another expansion of inventory in crude oil. And if you take a look at crude, what you'll see is when crude oil inventories go up, we typically get a little bit of a pullback in the crude oil markets. And so, you got to realize that supply is something else that causes market prices to change as well. I don't know if, that inventory report comes out once a week. This is the second week now where we've seen expansion. And then you've also got, I think it's Venezuela that's coming in, and they're starting to ramp up their crude oil deliveries as well. So we might finally see, that pullback that happened last month. We're getting a little bit of a run up. We'll take a look at the overall markets. Let's do that right now and see if anything on this list, what I say, what do the tea leaves tell us? If anything on this list is telling us something. All right. So here is the S&P 500. This is all the way up into yesterday. And you can see all of a sudden we've got that low. The lows, what I did was I snapped the lows from basically October. Took us up to the highs in mid-November. We had that pullback, a 50% pullback on SPY, and here we are. How many of you can say, I'm going to buy calls into the holiday? Because that's what it's telling me. We're going to run back up. You know what's above this blue line right here? Shorts. Shorts are above the blue line, okay? And I'm not talking about the shorts that are underneath your pants. I'm talking about short sellers that are going to have to make a decision if we jump up above 469.74 is the exact number, but 470. We get up and close above 470, and we're going to be in the 475 area not that long later. So, I look at this and I'm thinking, here's my ADD at work, everyone. I have ideas of what I want to talk about during my 9:30 program. And then as I'm looking at the markets, things get all crazy, and all of a sudden Future Mind comes in, and Future Mind says, bring up a chart of SPY, Tom. Let's take a look and see what we're talking about in terms of prices. What can we buy an SPY call for as we go into the holidays? And I'm thinking maybe not today, but as we get closer and closer to that area, that might make a great area to potentially scalp some money in SPY. All right, so let's take a look. So I'm going to put in SPY. I'm going to bump this up so everybody can see it too. I know we got some folks in here that are blurred up. I know that, I see it. I do see sometimes we get a little blurry on the screen. You know how I solve the blur? Like this. I solve the blur like that. I just expand the chart where even the blurry can see. Even those of us that forgot our glasses this morning, or some of us that are on a high latency, all right, which is opposite of low latency. So December 8th, I'm not interested in the options that expire today. I'm not interested in the Fridays. I am interested in something that's down here, that we get into that maybe the third Friday of December, maybe before we really usher in the holiday season. What are these options trading for? And I don't need to go 50 or 100% higher or lower than we are right now. 5% is fine, okay? Because when you're dealing with SPY, you don't have to go very far at all to find some good options. Let's go on down. Let's take a look at the calls. So 468.15 yesterday's close. Look at the 469s. This is the problem I got here, is that if we think for a moment that SPY is going to go to 475, and you buy a 469 call. And if we do, let's say on December 17th, we are at 475. What's the 469 call worth? Well, 6 points. How do you know that, Tom? Are you a genius? No, I just know a little bit about addition and subtraction. It's basic math. 475 minus 469 is 6. What are they trading for right now? $4.63. I don't want to buy something for $4.63 that could be worth 6. The math doesn't add up for me. I don't want to make $1 less than $1.50 on something that has risk of $4.63. I want to potentially make a double. So that's where I go out here and I think, all right, 475. What if I bought, let's just say, for instance, the 470, and I sold the 475. Let's sell the target. What can I do that for? Right? This is a quick little session on how to reduce your risk, looking at, that bunching that's going on with SPY. Now we're talking about something that's going to cost $2.27 or $227 per contract spread to make a potential 273. That's 120% return on risk. Now it's got my interest. Okay? So, you know why we use call options? Hey, I heard the whole talk about Stitch Fix yesterday and this morning. All right. Who was talking about Stitch Fix last week when nobody else was talking about it? Mano a mano, me. All right. So I liked the slide in and slide out before it becomes news. Sliding into that was the time to buy call options. Now's not the time to buy call options on Stitch Fix because everybody's in it. Now, when we look at SPY, what's the difference between SPY and a Stitch Fix? SPY, we're not looking at news on individual stocks like Stitch Fix, okay? So when we look at Stitch Fix, that's a news-related piece. That's a news-related item. SPY is not new. It is news-related, but it's 500 stocks. So we have to look at this one a little bit different. The patterns are going to be different. It's not an event trade. What it is it is more of a technical trade. So when I go back and I look at that stock chart and I see where we are right now, what's going on? What happened between here and here? Well, we came up and what happened? We got a little bit of bump up and then it closed down. And so that run didn't happen. We did get a pullback. Now what's happened is during this pullback, you got a lot of short sellers that came in. You really didn't have a lot of short sellers on this trip up. But this trip down, we got some short sellers that popped in. They're going to have to make a decision. We get back up above here. And you know what that decision is going to be? I need to pull back. I need to pull back my shorts. Now, how does someone pull back shorts? How? They buy. They buy to cover. And if there's a lot of buying to cover going on, what does that do with the overall market? Pushes it higher. So we're going to keep our eyes on that thin blue line right there for SPY. All right. Hey, let's take a look and see what else is happening. Now, take a look at the bond market for a moment. Bond market during the last, let's call it 2 months, lows down here with TLT. By the way, I'm looking at TLT. This is not some fixed bonds that you have to have a special license to trade. This is TLT. This is the ETF for the 20-year Treasury bond. Okay. 142 is your low during the last 2 months. 154 is the high. We're getting a little bit of a pullback. Do these two instruments, stocks and bonds, move together? They have been. They have been a lot lately, right? Typically, I like to see these move apart. But you know what? Sometimes they move together. Right now, stocks and bonds are primarily moving together. What I have to look at with bonds is I got to go back a little bit further. And you know what we see when you go back a little further? A lot of the same thing. As long as bonds don't really get above and close above 155 and make this big run up, right? If they're making a big run up, what's happening? Traders are getting out of stocks, getting into bonds. They're nervous. If we get a huge run down, we go below 141. What's that telling me? That's telling me that interest rates could possibly be on the rise. All right. So you know what this is to me? This chart is the Goldilocks for the stock market. We don't want it to be too hot. We don't want it to be too cold. Right now, as long as we stay in this area here, it is just right for the stock market. USO. I'm not even going to get into cash. Let's get straight to USO. You see what's happened in the last 2 months with USO? This is what we're talking about. Seasonally, oil, this is not the season. 'Tis the season for the stock market. 'Tis not the season for oil, because the seasonality in oil right now is actually trending down. I expect to see seasonality in oil go back up again around mid-February. So I'm not going to say a lot about oil except the fact that we're seasonally bearish, and I'm looking for a reason to sell this thing. All right? You know what the reason might be? 52.75. 52.75 represents a 50% retracement on this high to low in the last 60 days. And so that could be an area that I might creep in and sell. All right. So that's USO. Last one I'm going to look at with the overall markets, with an overall look, is GLD. Toughest one as a trader. You know why? Because it's been breaking all the rules. Let me show you an example of the rules it's breaking. Here's the low for the last 60 or 50 trading days. All right. This is GLD, by the way, the Spider Gold shares. All right. So it trades with gold, but it trades less than 10% of the price of gold. So 161. All right. 174.50 pullback. Now, when I look at these pullbacks, we have a 38% pullback Fibonacci. Squeeze right in here so everybody can see it. 169.47, 50%, 167.92, and 61% is the 166.37 area. What that is that basically means from low to high, if we pull back, where are potentially buying opportunities? Here's the problem with GLD. It's all over the map. It's not sticking on these potential buying opportunities or selling opportunities for that matter. This is not so much a trader's market, but more of an investor's market. Okay? So, why is that? Why is that? Is because, again, you've got volatility at work on the trading side. On the investing side, this is more of a buy and hold. Okay? So if you know me and you know what I do with GLD, how many in this room, whether you're in Money Morning Live or whether you're with me on the YouTube stream, how many of you in here trade or invest in GLD? All right. Anybody in the room, trader or investor in GLD? You know, GLD is it's highly liquid. You take a look at the options, the calls and the puts, highly liquid. All right. So there's no problem about being a small fish in a big pond in this environment. But it's not the easiest thing to trade. I have to find trading strategies outside of looking at Fibonacci when I'm looking at GLD. So I wanted to throw that out there to everybody in the room. And I see a lot of folks in here, more than not, that trade GLD. I'm an investor in GLD. What I do with GLD is I like to get paid to trade. Okay. How do you get paid to trade? I'm going to talk about that here before my time is up. Okay. Now, let's move into the next segment I want to talk about here. So, you know, we talked about the news. We talked about the overall markets. When I look at something like GLD, all right, what do I need to look at? If it's not Fibonacci, what is it? Well, one of the things that I do is something called darknet. Okay, so darknet is a way of looking at long, short, and intermediate term channels, where we look at channel collisions, is what I like to call them. What is a channel collision? A channel collision is when we look at, again, and I'm looking at support points. Support points on a long-term channel, support points on an intermediate-term channel, support points on a short-term channel. Now, the difference between what I do and somebody that just draws a bunch of stuff on a screen is that I can go back and back test this stuff. And I can back test it on stocks, and I can back test it on options. Okay? I'm not going to put some lines on a screen and say, hey, if it goes up here, you sell. And if it goes down there, you buy. Because how often did it actually work? The only way you find out how often it actually works is you take yourself out of, think about this, guys. Those of you that are new here, if you're new, ask yourself a couple questions. First thing you want to ask yourself is, how did you get into this room to begin with? How did you show up here? Okay. You probably showed up here because somebody or something told you to show up here. That's great. That's a great first step, because what we're providing, and I'm talking about me and the entire group, are things that you won't necessarily find on mainstream media. Okay. And I'm talking about CNBC, Fox, definitely CNN and MSNBC. But if you really am talking about Fox Business, Bloomberg, CNBC. All right. One of the biggest reasons is that you take a look at what we do. We have something that a lot of the other folks here have too, and that's called skin in the game. Okay. I got a lot of skin in the game in everything that I talk about. Okay. I back it up with my trading. When you look at mainstream media, what do you see? What I see is I see an analyst on the screen, and then I see that big spreadsheet that comes down beside him. And it says, does he own it? No. Does his firm own it? No. Does his family member own it? No. Does his spouse own it? No. Significant other? No. Is it somebody who he hooked up with? Do they own it? No. So that's an example of someone that doesn't have any skin in the game. Now, on the same cusp, if I show you things, all right, if I'm showing you, for instance, recommendations of such, I'm not going to put them on before you do. I'm not going to put something on and say, hey, I did this trade, you should too. That's not going to happen, okay? I don't want anybody to think that I am making a group run up my stock. In fact, the opposite happens. I don't put something on until well after you have. So if anything, you get to jump on me. But realize that we have skin in the game, okay? And part of the strategy that I use for skin in the game is something called Darknet. I'm going to show you what Darknet does. So Darknet is something where we look at what I call channel collision. This is an example of channel collision right here. Ryan, move my head over. Move my head somewhere else. It's in the way. Channel collision, thank you, is a way of looking at long and short-term channels. And what I'm looking for is them all to collide in a particular spot. And that could be support and that could be resistance. Okay. Now, I've done all right. I've done all of the homework on channel collisions. And what I found that the longs work much, much better than the shorts. Okay, so example, if I see a channel collision long like what I have on the screen here, then I'm looking to figure out a way to buy this. If I'm seeing a channel collision short on the screen, in it, I'm looking to get out. But if I'm not in it, I'm not necessarily looking to get short. Do you know why? Does anybody want to know why? You see, it's at least for me, if you look at all the things that I do in the market, sometimes I day trade very, very little. Sometimes I go very, very, if I'm doing something long, and I've got a portfolio of long stocks. I don't do a lot with them either. But the stuff in the middle, my sweet spot is about 30 days, roughly. In a 30-day move, I'm going to make more money on the long side than I am the short side. It's just, that's the way it is. Okay, it's the way it's been with the markets since going all the way back before World War II. There you go. Shorts, you want to be short for a short amount of time. You want to be long for a longer amount of time. Okay? All right. So this is what I see. This is what the computer sees. And my AI just says, all right, here's where a channel happens. This is the long. This is the out. This is the in. This is the out. This is what the computer sees, because the computer, throws the channels up. But the difference between an analyst or a technical trader and a rules-based trader is a technical trader could see something, could be objective, could be subjective, but a rules-based trader knows it precisely when to enter and exit a trade. That's it. That's it. Okay, let's take a look at our screen once again. I'm going to start back over with SPY. Is there anything in SPY that is telling me that we possibly have a buying opportunity? No. In fact, if I take this back 100 days on SPY, let's see if I see anything on a, no, last 100 days, I haven't seen a single thing happen with, in terms of channel collisions that the computer is finding for us. How about TLT? Nope. How about USO? Nope. How about GLD? Oh, look at this right here. Looky here. All right. Last buy on GLD, last channel collision buy happened here back in the middle of August. He had a buy signal at 163 and a sell signal came at 168. Okay, so 163, 4, 5, 6, 7, 8. That's 5 points. Can you make 5 points in GLD? Yes, you can make it on the stock, but you can also make it on an option trade. All right, guys, look very closely as I increase the screen. What do we got here? What is that little guy right there? It's a buy signal. That's a buy signal not very far from where we are right now. Okay, so I have to think down the road a little bit here. What have we done, folks? Please, for the love of God, somebody in this room, tell me what I just did. I talk about it on the screen, here with you every single day, 3 days a week. It's a 3-word slogan that I use. All right. Anybody want to chime in? Do I have to give away a trip to New Zealand? I don't think I have any more right now. I've got to figure out if I can or not. Glenn, way to go, buddy. Spot the opportunity. We just spotted it is our darknet design, okay? Now, darknet tells us what? Darknet tells us a couple of things. It will give us a buying opportunity. It does not tell us the projected target. It's not that good. It's good. It's really good. But this is one of the signals where we have to go in and look and see, well, where can we project? And our projections could be something I like to call stock chart peaks. We had some peak support that came down here. How interesting is this? You get the darknet buy, and the day later, the next couple of days, we start hitting a double line support. I've got double line resistance right up here. What is right up here? 171. Okay. Where are we? 166.81. Let's call it 167. 8, 9, 10, 8, 9, 10, 1. Okay, so a 4-point, possibly a 4-point move. What do we do now? Okay. By the way, this particular screen is tomsoptiontools.com. It's stuff we don't just throw out there for everybody. Okay. I like to work with indicators that not everybody has access to. Okay. You're not going to find this on Schwab, Fidelity, Robinhood, or any other area with software. This is our own. Okay, this is our own software. And so when I look at what's going on here, I then want to jump in and look at, well, let's pull stock and option table up. Okay, and what we're going to look at is not SPY because it doesn't have a signal yet. How about GLD? Let's take a look at GLD. So GLD, and let's update that. Let's also look at GLD, and we really need to go out about a month because, again, remember, these are average 30-day trades. Okay, so we're coming into December 10th expiration on Friday. Let's go a month into the future. That takes us to Jan 14. We could look at Jan 14, or we could look at Jan 21. Jan 21, the thing I like about it is a third Friday option. It has more strikes. Has a little bit more time to expiration, but it has a lot more strikes. Look at that. It has double the strikes of the 2 weeks prior. Fantastic. Let's update that screen. Let's go look at some call options. All right. Now, we're going to run into the same problem, potentially the same problem that we had with SPY. The option traders already are saying to themselves, hey, 167s. We're bid 320 and offered 330 because we believe by January 21st that the range of GLD is going to be somewhere about 3.25 points north of 367, which puts us where? That's going to be $170.25. Well, if our target's 171, our reward is not going to be worth the risk. So what do we need to do here, folks? What we need to do is potentially either you could do one of two things. You can spread this or you can create something of more value. Now, creating something of more value would be, what is the 164 calls going to be worth if we get to 171? What's that potential opportunity look like? 171 is going to be worth 7. So you're going to put something on that's going to be almost $5 and it could get to 7. Still, the reward to risk doesn't really work. So what I have to do is I have to go in and either I have to say GLD is going to make a move that's going to be greater than 171, which is going to be less probable, or I simply take a higher probability trade of being right. And that means I look at buying something like the 167s and maybe I sell the 171s, which is the target. Buy now, sell the target. Think about this is the mall theory. All right. You know what the mall theory is? When I go into the mall, folks, I'm a guy. Okay. I go into a mall. My wife goes into a mall. She starts looking in different directions. She starts looking at where she wants to go. Shoes, perhaps. Different areas. You know what I look at? Where's the Apple store? And does it have a Tesla store? And I'll go in and I head straight to the directory. In the directory, I look at and I see the Tesla store and the Apple store, and I'm looking at the directory. I'm like, where am I? You are here, and you want to go there. And I do a beeline from where I am to where I'm going. That's what we're doing right now. We're doing a beeline from where is GLD and where do we see it going? And so if I buy where I am and I sell where I'm projected to go, can I do that and have less risk and potentially more reward? And the answer is yes, I can. I'm not going to spend $350 or $370 on a call option. I'll spend $151 on a call spread to make $249. I am going to have potentially the opportunity to make nearly 165% on risk on the same move. Okay, so that is looking at strategies that, again, we're looking at strategies that do what, folks? That simply go against the grain of the masses. Okay, now, what else could I do with this? I could look to get paid. How do you get paid? All right, I get paid by, let's clear the graph. Let's say I want to own GLD and that this dark net buying opportunity is a great place to get in and create a long-term position. Here's an idea. How about selling some puts? What if I were to go in and sell the 166 put? If I want to be a potential owner of GLD, what about selling the 167 puts? Okay, forget the 166. Let's get really close to the money. 167s. Well, what's that 355 mean? That does not mean I've got to pay 355. If I'm selling this put option, what I'm doing is I'm coming in and I am giving myself the ability, all right, the obligation to own GLD at the low price of 167. But wait, Tom, that's higher than the price. That's higher than the price. It's 20 cents. All right. It's where all the time value is. Here's the reason why I like this. Because I'm looking to get paid $3.55 to potentially own this at 167. That's how you get paid to own something. Now, there are a lot better opportunities out there than GLD where we can get paid to own something. Right? And I want to talk about that right now. So, that kind of slides me into the next piece I want to discuss with you guys, which is what I like to call the morning report. And the morning report, what did we look at? Yesterday, we were looking at high volume and high open interest. Today, I want to slide down here and look at expensive options and cheap options. This report is available to all of you that are in here, okay? All of you in this room right now, all 1,400 plus of you, have the ability to go right now out to your favorite Apple store or your favorite Google Play store, and you can download this, okay? You can download this. This is called the Morning Report. Go to Tom's Option Tools. Just do a search on Tom's Option Tools in the Apple Store or in the Google Store. Download that if you use our software. A lot of you do. I know a lot of you do. If you use our software, then you just use your username and password. If you don't, that's okay. All right. It's okay. You can go down below the login. There's an area that says non-subscriber login. Fill that information out. You have access to this report too. Now, if you look at the second part of the screen, this is what happens when you log in. This is, I've got Darknet here. I've got Money Counter. I got Cash Clock. I got Microcurrency Trader. I got Velocity. I got Triple Threat. I think I have another one on there now too. These are all premium buttons up here at the top. But then there's one that all of you have access to, and that's our morning report. You click on that morning report tab, and then this opens up. And you have access to 6 reports that we update daily. Okay? So what does this report give you? It gives you the high volume, the stuff that that you need to be looking at. What are the highest volume option trades going on today? What are the highest open interest trades? Where is the unusual calls? All right, call volume, unusual put volume. And then what I'm going to talk about today, which is cheap and expensive options. I'm really going to lean into expensive options with you. So when you look at cheap and expensive options, and this is what it looks like today because I blew it up on my screen. Where is it? There it is right there. Cheap. All right, so I look over here. Triple D was cheap yesterday. X was also cheap yesterday. It's cheap again today. But today I want to really kind of focus on this side of the screen, the expensive side. And I see Trupp on here. I see Casey's General Stores, AT&T. What in the world is AT&T doing on the expensive side? Well, guess what? It's not an expensive stock, okay? I don't want you to get confused. This is the part that's expensive is the fact that AT&T has been sliding down so much, it's starting to create fear in the option traders. And option traders have been bidding up the calls and puts on this. So now options in AT&T are much more expensive than they've been in the past year, right? Look at this one right here, NVAX. All right, we're going to talk about NVAX here in a moment, but if you take a look at this list, all of these have some common denominators. Okay, high IV, this is the most expensive these options have been in a year. Low IV, this is the lowest that they've been in a year, and current. And when current is close to or equals high, it just means you don't want to be buying calls or puts on these. It's too expensive. Okay, too expensive. I want to be looking to sell this stuff if I have a reason to sell. Now, one of the reasons to sell might be looking at a strategy that we do here every Wednesday. I call it the Rocket Wealth strategy. Okay? So if you look at the Rocket Wealth strategy, take a look at well, let me give you the common denominators. First of all, this strategy involves statistical probability. When you think of probability, think about a coin flip. If I'm flipping heads or flipping tails, I have a 50-50 chance that coin's going to land up or down. Okay? We see that at the kickoff of nearly every football game. And so, which side are we defending? Or are you going to receive? Or are you going to kick off? That's a 50-50 call. When you start flipping a coin more and more and more, the more you flip the coin, the more you're going to err to that 50-50 probability. You might have a 3 or 4 coins that turn up heads at a time, or 3 or 4 coins that turn up tails at a time. But the more you flip that coin, the more your statistical probability means back to 50%. Now, when you use options, people, a lot of people wonder, well, why do options lose money? I've heard that 70% of all option traders lose money, or 90% of all options expire worthless. Okay, I don't know what the exact number is. It has a lot to do with the number of strikes on each option, because that weighs heavily on the percentages of options that expire worthless versus options that expire in the money. And just because something expires in the money doesn't mean you made money. It could be worth less than you paid for it. So yes, more options lose money than make money, statistically, when you look at a random walk theory. Now, I don't trade the random walk theory verbatim. All right. I do some of my stuff. Again, guys, my whole strategy, and the strategy that my family, my group employs is we do this kind of rob Peter to pay Paul strategy. We do some of our trades in this area. I got some stuff in crypto. I got some stuff in spreads. I've got several different areas that I attack in the world of trading and investing. This by far, all right, this is one of the best track records that I have right now. And it's because I mix this particular mathematical equation with first-class stocks. That's it, okay? So how do I do that? With something called probability cones. A probability cone is a way of looking at stock a little bit differently. So take a look at this. We talked about Nvidia not too long ago, so I'm bringing up a recent chart of Nvidia. And we looked at the price of Nvidia as it was coming into earnings. So first-class stock, really, really expensive options. And I'm saying to myself, how can I own Nvidia and get paid to do it? It doesn't sound possible, but it is. All right. How could I possibly own Nvidia? Not probably, but possibly own Nvidia at a better price and have somebody pay me to do so by selling cash secured puts. All right. This chart shows Nvidia above $300 a share, yet I had the buy zone down at 235. So you can do this one of two ways. You can buy the stock, you put a limit order in at 235. You're not going to get paid to put a limit order in. The way you get paid is to write a put option with a 235 strike. Now you're getting paid. To do what? To have a limit order if the price falls at or below 235, right? On or even before expiration. So that's how we do that. And it's just a matter of using the probability cones. I do this on first-class stocks. We have a list of stocks that we follow on this. From here, we simply look for the option prices that make sense. With Nvidia, the 235s are trading for about $2.20. So then it's just a matter of going in and creating that trade. And that trade, if you see the green on the right-hand side of the screen, that's the profitability of this trade. That's what comes with high probability, right? High probability of profit. So how do we do this? Well, the first thing that a lot of people think of is, well, Tom talks about selling expensive options all the time. What about selling expensive options? Could we do that? All right. There's today's expensive option list. I threw it on the screen for you. If you look at that, look at the biggest one on the screen. You know, if you take a look at current IV, you come down the screen, Trump has 88. All right, that's not Trump, that's Trump. 40 for Casey. T has 27. Baba has 58. By the way, Baba was the most expensive option just a couple of days ago. It's eased off. Pfizer. All right. Do you guys like that rap? Pfizer, Moderna. I know you are. Oh, gosh. Hey, you got to have fun when you do this. All right. When you stare at a screen all day and you stare at numbers all day, you know, you got to be a little bit of a kook to do this every single day. So that's, you know, that's me. That's the entertainment. I'm entertaining myself, guys. I'm not just entertaining you. All right. USO. So USO is also very heavy in terms of premium. Look at NVAX, though. NVAX had a high implied volatility. The options. What we do is when you look at this, you know, and I know a lot of you guys are looking at this and you're confused, and I get it. Okay. I want to try to put this in as layman's terms as possible. That NVAX, that 165, that's not the price of NVAX. Okay. That's not even a implied volatility price. What that means is when we see that number, that higher number, it means that options are so expensive that they're expecting a larger range potential move in the stock. So these big ones like NVAX, they're looking for really, really big ranges. And so let's look at NVAX real quick. Let me bring a chart up on NVAX because I have it here. Here it is. So I looked at the probability cones on NVAX. All right, now I can look at this a number of different ways. And one of the ways I'm looking at this is I see this probability cone and I see NVAX kind of around the 270 mark. But then look at the low. This thing came down to like 125 from 270 to 125. So it absolutely has the potential to get cut in half very quick. Back up to 220, 230, and then back down to 130. It's all over the place. No wonder the option premiums are expensive. Okay? It's a bit of both, Mike. So if you look, you know what the cones are saying? The cones are saying the farther out we go, the way the options are trading, the expectations are that this range is going to be very wide. The blue cone says we should stay, all right? We're expected to stay in this range. This expectation is 68%. That is a standard deviation. All right, the red cone is a 95% standard deviation. Now, notice that I said 95%, not 100%. It's not a guarantee. But what we do is we take a look at these and we put them on first class stocks to see if we can create a high probability opportunity. Now, here's the problem I have with NVAX. NVAX is not a first class stock. A first class stock does not get cut in half or by 75% within 6 weeks. It's not a first class stock. Okay. So, and plus, this is the statistical move. If I come over here and I say, and I'm looking at 113, if I plug in that 165 and I update it on 165, look what the cone does then. I mean, that cone's going all the way up to $460 and it's coming all the way down to 72. Insane. So what do we do this on? All right. So we run the algorithms. Okay. We run the algorithms, and what we're doing is we're trying to figure out, again, where can we find something that makes sense like this, but at the same time, not put ourselves in a position where we have a stock that can drop 75%, because you don't want to put a trade on where you're getting a nice little low down here. Let's call it 150. And all of a sudden the stock's trading at 50. You're never going to get the kind of premium, even if you got $5 for the 150 put. If you're down $95, that $5 doesn't look like a great payday. Okay. So we got to find a common denominator that separates the winners from the losers. Okay. And we do that. And so what we do is we find these on these first class stocks. So what I'm doing is I'm not looking at expensive options. I'm looking at, for instance, here's some opportunities. Tesla, American Airlines. All right. Twitter's on here. Micron's on here. PayPal's on here. AMD. Okay. So you look through the group and you see, what rises a little bit more to the top. Some of you might be looking at AAL, American Airlines, and you're saying, hey, that's not a first class stock. It is in its industry. Okay. It is in the industry. That's why it's there. It may not be the best stock on the list, but it is nonetheless. So when I look at Tesla at the very top, I think we can all agree in the room, Tesla is a first class stock and a first class company. Okay. It's a first class company in its industry. It's crazy. Yeah, they don't make the kind of money that a Ford or a GM, are capable of, but it's got technology. It's got something there that nobody else has. And, when you look at, for me, I'm looking at Rivian as an example. Okay. So I kind of like the Rivian truck. What do you guys think about Rivian's product? The Rivian product that I like to call it, when we look at Zillow and you're looking at houses and you see the one that says new construction and you see this beautiful rendering, right? That's what I see with Rivian. I see a rendering. And now we might have a prototype out there. We might have a couple of things that are there. But until I see the real deal, I don't know what that's actually going to physically look like. I can walk into a Tesla store and I can sit in the real deal. I can test drive the real deal. I can buy the real deal. And 6 weeks later, I got the real deal. And so I look at Tesla, and that's what tells me that that's a first class stock, right? You know what else tells me it's first class stock? Look at the price. Look at the price of this thing. So, when I'm going out looking for these, I'm going to run over and I'm going to bring up the stock and option chains one more time. And let's do a little teaching here. All right. So you want to own Tesla? Let's look at owning Tesla. But do I want to own Tesla, looking out into January 21? Let's just say we want to look at Tesla. So if I sold the 1000s, okay, there's the 1000 puts. You're going to get $72 for these suckers. You're going to get in this case, you're getting over 7%. You're getting a 7% return, a 7% payday. All right. You get that whether the stock goes up, down, or sideways. And you're also putting yourself on the hook, though, to buy the stock at 1,000 if it gets down to 1,000. So that's an example. Now, what's the probability on that trade? Well, when I look over here, I can see that the probability of you being profitable on that by January 21st is somewhere north of somewhere around 65%. We look for 90% probabilities. Okay. Now, how do we How do we do? How are we doing on this? Well, on Rocket Wealth, this is how we're doing. All right. Here's our last 90 days on Rocket Wealth. Okay, so we got Meta on here, 100% gain. Okay, and by the way, I want to throw this out there too. Some of you are looking at this, and how many of you know what put selling is? And you say to yourself, too expensive. I can't do it. Too expensive. If you're that person in the room right now, say I can't do that. It's too expensive. I like that. I love the green on the screen, but maybe I can't do that. Well, let me bend your ear for a second. What about a put credit spread? What about a put credit spread? Because a put credit spread still gives you the same probabilities. It just gives you a lot less risk, a lot less margin, which is required when you do something like this. But your probabilities remain the same. All right? And we do that in Rocket Wealth as well. Let's look at a couple other ones. NOC, 100%. Beyond Meat, 100%. You know, the meat might be fake, but the profits are real. Aon, Rock, there's Zillow. We've done Zillow. Zillow, guys, by the way, Zillow is a first-class stock in the industry. But right now, we're not getting any buying opportunities. Autodesk, John Deere. There's AAP. You know, we took an AAP trade earlier in the year. That one clocked out just last month, 100% return. AMAT, Ulta Beauty. Hey, I ask anyone in my family, all right, that has hair longer than me, where do you go for your makeup? They're getting it online, but they're getting it from Ulta, all right? Ulta Beauty's got so much going for it in terms of its branding. You know, it's got the Kardashian effect, and I'm not talking about the double bottom that's talked about on different programs. I'm talking about the branding effect. So that one too, 100% are there. Okay. And so when we look at these things, what are we doing, guys? We're doing a couple of things. When we look at this, we're doing a couple of things and putting things together. What are we putting together? First class stocks, looking to get paid, to buy the stock much cheaper than it is today. All right. And then how do we get out of these? All right. Well, I'll give you the rules. You know, I do these on stocks that I want to own. Now, yes, I have artificial intelligence on my side that helps me find the best ones. But I'm looking at 60 to 90-day options. This is not something that we go into and we're doing on a weekly basis, right? I want to get paid a higher than normal payday. I don't want to get a day's pay. I want to get a month's pay. I want to get 2 months' pay in one shot. And I want the opportunity to own the stock at what I believe is a fantastic price. I want to make sure my probabilities are greater than 90%. I make sure the implied volatility is in the higher range. It's in the expensive range. And I want to position size it in case I end up owning the stock. Now, on the exit strategy, we talk about this with Rocket Wealth. You know, we could look for it to expire worthless, or we could take the assignment if the stock indeed happens. And guys, by the way, I have had the stock take assignment maybe once or twice in the last year. Most of the time, we're just getting paid. If we exit early, this is one way that some of our members, kind of hopscotch past a lot of the margin is they put the trade on and they look at it and say, well, if I sold these puts and I got $10 and now they're only worth $1, I have a $9 profit. Let me just buy those back and take that profit, take that margin, put it back in the bank those profits, and use it on something else. Because I'd rather go out there and sell another $5 put than sit on one that's only worth $1 or 50 cents or 25 cents, and I've got to wait another couple of weeks or maybe a month for that 25 cents to go down to zero. I'll just buy that back and put that money to work in a different area. And then the other thing that some of our members do is they simply say, you know what, instead of the put, let me do the put spread. And we talk about the put spreads every single week when we're discussing this strategy, okay? It's called Rocket Wealth. If you want to join me, several different ways to do it. Just contact the office. They'll give you all the hype. Okay. Let's finish up our day talking a little bit about cryptocurrency. All right, cryptocurrency. So Oh, let's go to Bitcoin. Let's go to Bitcoin. Bitcoin, where is the Bitcoin? There it is right there. Okay, so this is my cryptocurrency chart. This is a chart of Bitcoin. As you can see, Bitcoin's kind of hovering. I'm looking going all the way back to that $29,000 low we had back in July. Okay, so again, guys, when I look at and analyze the markets, what I'm doing is I'm looking for points in the year, low points, high points. The real low point in the year for crypto, as far as I'm concerned, happened back in July when we took a 50% haircut on crypto from the earlier highs in April. Now, we take that low, we ran all the way up to 67,549. I'm going to explain this in more detail tomorrow, okay, tomorrow morning. Whoever was here at 9:30, they're not going to be here at 9:30. I'm going to be here at 9:30. Garrett's going to be here at 9:30. We're going to be talking crypto and nothing but crypto. And I'll talk about Ethereum tomorrow, and I'll talk about Doge tomorrow. And I've got a brand new coin that I want to give to everybody, okay? Not just my microcurrency traders. Microcurrency traders, we got our eyeballs on several coins. So you might see a couple picks coming out here real soon, right? So don't worry. We got you covered. But I got something that I'd like to lend out to everybody. And so we'll talk about that tomorrow, okay? So see that move up? I see that pullback. I see that stab down to the 61% area. We're hovering right now in the 48% retracement area, okay? You see that? 48%. And so when I look at Bitcoin, you know, I'm going to, let me just add something else on here, okay? This is how we do it, everyone. This is how we do it. Let's bring up my Coinbase. All right, my Coinbase Pro. And you can see here. So what's going on? We're trading right now. We're back up to 51,000. It's amazing the difference that an hour makes, isn't it? Isn't that something? The difference that an hour makes. Because we were trading down around the 41 area, or excuse me, 49. This is 7:30. This is 9 o'clock. Monday Morning Live. Oh, Bitcoin's down to 50. You know what I'm seeing when I see 50? I'm seeing support. I'm seeing support at the 49,000, 50,000 area. And boom, we're already back up to 51,000. It happened that fast. All right. There is a coiled spring effect happening with cryptocurrency right now. That is what we're going to talk about tomorrow. We're talking about a coiled spring effect. We're talking about what I see happening as the greatest crypto trade of the century. And I want to talk about it tomorrow. I want to talk about it. I really want to talk about it now. How many of you want me to talk about this right now? I got 30 seconds. Really, in order for me to talk about this, I really want to set it up for you, okay? I think this is going to be something incredible, all right? Yes, there's going to be a lot of education in here. And yes, I got something very cool that I want to share with everybody. But I'm going to hold it off till tomorrow. I wanted to spend the entire hour doing this. You might say, why didn't I do this on Monday? You know, I do cryptocurrency on Monday because you saw what happened over the weekend. Come on. I'm not going to go out there and throw caution to the wind. I needed the first part of the week to see if the setups appeared to be real, to see if the rules-based trading was coming in line. So I'm going to talk about the rules-based trading tomorrow. I'm going to talk about crypto. Garrett's going to be quizzing me on a couple of things. We're going to have a good time tomorrow, 9:30. Join me then, guys. All right. Till then, have a fantastic rest of your day. I know I'm going to. And I'll see everybody tomorrow at 9:30. All right. Take care. Peace out. Bye, everyone. Pfizer, Moderna, I know you earner. Get in line. You got to wait your turn. See you guys. Hey, everyone. Tom Gentile here. Do me a favor. Mark your calendars right now for December 9th at 9:30 a.m. Eastern Standard Time. Because I'm going live in the Monday Morning Live trading room. And the reason why is I've discovered an opportunity that's so big and with so much profit potential that I'm calling it